investors. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. Good to be back. And we're looking at the Dow. Now only down 36 points, 38 points, 34 points. Whoa, big change every minute. 39,413. I'll just go through everything first, and then we come back and we do Technical Friday. So the S&P right now, SPX.X, there we go. The S&P is now only down $1 at 53.18. Very nice action. Trying to test the pink 9-period moving average. Let's see if we can get by next week, Wednesday or so, we can see that pink 9-period moving average in the different indices start to get close to positive. That's a big ask. Go to the QQQ. We're looking at the Qs down 54 cents, 49 cents at 447.50. Nice action. We'll see if it's able to get to the 448.70 area today. We'll see. IWM, the Russell 2000 small caps are coming back a little bit down 73 cents at 206.14. And within that context, we need to probably have to see the 208s by Monday. That'll be very important. Okay, the next thing we're looking at here is I want to do the semiconductors. Semis were a little bit weak, down $1.54 at 223.36. They're acting okay. I think they're going to be lagging for a while. And that includes NVIDIA and the others. NVIDIA, let's see, that's up. No, it's unchanged at 104.85. Yeah, it's kind of struggling. Looking at the silver, SI, silver right now is trading down 0.07 at 27.52. Hasn't been really acting well. Gold's chart is way better than silver. Isn't that funny how they rotate in strength? Looking at high-grade copper, it's about time it rallied. Yep, it's rallying 4.01. It's up 0.05. It's a nice move, but it needs to sustain this move. Can't just be a one-timer. Okay, we're going to go to crude oil. Crude oil right now is up. No, it just went to minus 0.05 at 46.13. Let's see. It's at the 200-period moving average at 75.66. That's going to be strong resistance. It needs to get over that and hold over that. Looking at the bonds, hey, this is going to be it. Bonds are now up a point at 122. Let's call it 123. Now, what's really important about this chart is if you look at the weekly chart, look how it made that beautiful cup pattern. I had this inside wedge target resistance. Excuse me, I haven't sneezed in the show for a little while. I had that target resistance level. It went above the 126 high back in January of this year, and it went above it, and then it pulled back. So it's it's almost tested 127, and now it's back it went to 121 and 28 seconds. Yesterday tested it, and now it's at 122.31. What we're looking at is, in the context of bonds, it's better to go to the TLT, just a little bit clearer, in the sense that it did not take out the high that was made back in, I think it was January, the first week. Let's just go to that. That's, December, the last week of December, week of the 29th, 2023. It had 100.57. So I'm going to type that in because we need to use that as a benchmark. 100.57, and that was 12, 29, 23. Okay, very good. And then we dived all the way to the 87. I mean, these are bonds. They're trading like stocks, right? Dives down to the 87 area and comes right back. But what did it do? It stalled under that 100.57 level when it went there that was on the 5th of August. It went to 99.94. So let me type that in. 99.94. And 99.94. I'm a little upset. I guess I can't do two things at once. I went long just at the break. I went long the E-mini And I think I'm just I'm not even going to bother. I think I heard that it got stopped out by a tick, and now it's doing exactly what I wanted. It's going to leg D. That was just this last trade anyway. So now we're looking at that left side high of 53.51.00 at 9:40 this morning on the E-mini. Now, what's really important about this, now I can talk Technical Friday because we've been through all the different indices. Let's go through this one at a time. Okay, let's go to the Dow. So you'll see that in the Dow pattern, the daily pattern, I drew in this trend line. I drew it in quite a while ago, maybe about a week ago. I said, this is going to be important, going to the low that was made at 38,000, a round number just about, low. That was late May. And then we went all the way to that 41,376.00, round number high, all-time high on the 18th of July. And then we tumbled down, trough A, trough B. We had a cup formation test. That test was negative because the MACD turned down. It wasn't even as strong as it was on the left side on the 18th of July. And the stochastic was way less than it was back in the 15th. And now what we're looking at, the relative strength turned around. So we had this dive to the downside, and we went to 38,409. Now, we've been buying this a little aggressively, but we've been buying it. We are long the Dow. We're long-term long for a long time. We've had shorts, we've had longs, but the most recent buy was the other day. We took profits. The stop got hit. Then we got back in. I think yesterday morning we were very fortunate. Pre-market, it came right to the price we wanted, and did a fabulous session. And I think we're moving higher. Now, I had mentioned to my subscribers that this is a Chapman wave restart, a potential restart pattern. What on earth is a restart pattern? A restart pattern is when there's a low that's made in the price that you're following, and then there are these bounces that go up, but it keeps pulling back, but it does not take out the left side low. In this case, 38,499. Instead, it can make higher highs, all within this pattern that turns out to be like a rectangle, or this is the start of a move that's frustrating because it splutters. It's like a car backfiring. Bop, 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 and it's not garnering that strength. Now, of course, not if it's electric. And then what happens is, at some point, traction comes in. It's like slipping on ice or sand, and then traction comes in. How it takes out this, isn't that amazing? Now, the price stopped for 3 days right at this trend line. The trend line today on the Dow is at 39,540. We're trading 100 points below that. So I don't know if we're going to get there. I'm saying that's where it is today. It's a rising trend line. And the weekly chart, now I can go to the weekly chart and say, well, first of all, let me finish the daily. So the 9-period moving average, still very weak. The MACD is horrible. Look at the distance between the 9-period differential. It's called, this is the green line, the 9-period differential, and the 26-period exponential moving average. That is, to get that positive again, you're going to have to see the Dow in the 41,000s. So that means there's a work in progress. Maybe it's a period of higher highs, but maybe not that high, and higher lows, just to get the green 9-period differential to start to get close to the to cross positive. The relative strength is rallying. On-balance volume's not bad. Stochastic's way down in 19. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the US futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, so let's just keep with it down for the moment. So the stochastic's at 19%. Now, if this is going to rally and have a long-term rally, meaning, an intermediate term, meaning it's going for weeks, then that 38,499 level is sacrosanct. It must not be taken. If it's taken out, 38,131 is a 200-period moving average. It's rising, so that could change, but that's what we would see. But what's really important about this restart pattern is that it looks like it's struggling. It looks like it's struggling, and the technicals are not that great. And then the technicals, it takes a while for the technicals to improve. So that means that you're kind of a little bit vulnerable to upside caps. In this case, I'm using this trend line right here, and I just gave you that level that we're looking at as very strong, besides the 9-period moving average, which is a resistance, and then the black 14-period moving average. If you look at the weekly chart, it is not a great-looking candle. So the question comes in, so why would you be going long? One of the reasons is we're aggressively long, in that we are 3 times long. That is the UDOW. Probably the Dow 30 is going to tell us a tremendous amount of what's going on, especially based on it encapsulates really the broad picture of the U.S. economy in all the different, the composite, all the different stocks. So I like this. I like it because it tells me a bigger story. But most importantly, we've got our stops in. It's not like, oh my God. No, I'm not saying this is the move. I'm saying, look how there is nothing here positive other than the price on a purely technical basis. Even if I use this particular chart right here and say, wait a minute, let's use the on-balance volume. Where's the on-balance volume? Well, it gave a really nice sell signal at that round number high. It hasn't really given a very good, I haven't even used it as a buy signal in the daily. I think this is a work in progress. And when I say work in progress, I mean that it's going to take time as well as price, but probably a little bit more time to rectify. And one of the reasons is if you go to the Technical Fridays, I'm going to be purely technical here. If you go to the volatility index, I'd say the day that it was happening, 65.75. Yeah, you can call it the carry trade. You can call it Japan down 20%. You can give it any title you want. I don't care. This is the volatility index. And the last time it went anywhere close to this level was the 85.47 high of March 2020, right at the low. And that was, I mean, if ever there was bad news with COVID, etc., it was also business, Fed, everything was in place. And yet it took all of that to get to 85.47. This was more a function of the press, of the media. I don't want to go through the whole thing with the media again. I think you can see it very well, what I discussed about the media, how the power of the media within, if the media across the country talk about a particular thing, and that's what happened. I'm alluding to other things, but right now I'm talking about the high that was made in the VIX index right here on August, was that the 5th? Yep, August the 5th. I may as well put the date. I forgot to put the date. It also means that if it, and you can tell because people around the world, actually, not just here in the United States, were talking about, crashing markets. They weren't crashing at all. It was just the media that hyped this up. So that just says to me, we've used up all the ammunition for fear. That doesn't mean to say, if you go back historically, I don't want to do it, I'm just going to tell you about it. If you go back historically, I have a chart somewhere that has the VIX index in relation to the S&P. You will find that there are periods where the VIX index made its high and the markets actually kept going down. They had a nice bounce, but then they just kept going lower. So it's not the end all and be all. I'm saying it's one part of the puzzle. The chart patterns are the other part of the puzzle. And as far as I'm concerned, what we're looking at here is that the selling pressure in the overall market has gotten to the point where even though you can read other statistics, I believe that there's a lot of hesitancy, and that's giving the market a prop, at least for support. Okay, let's get out of that now, and I'll go back to the S&P. S&P, I don't type it on the chart, just go to the S&P, and I'll talk about that for a moment. There are a lot of stocks I want to get to, so let me just get this out the way. S&P has had a nice move to leg A, gray A. Why do I call it gray A? Because I use blue lettering for my buy modes. We're not even a buy signal. Look, the stochastic is still only at 26%. The histogram in the MACD is improving, unlike the Dow. This one's improving a little bit. The relative strength, that little gray line there, yeah, it's a little bit better, just a little bit. The 9-period moving average is still way underneath the 14-period moving average. A work in progress for sure. Okay, so as I see it right now, yes, there's a falling axe formation. What is that? That's where you make lower highs and much lower lows, and all of a sudden, the price that you're following, the symbol that you're following, starts to find some support. And it makes, I may as well show it to you right here. That's upside down. It's not the one I want. This is the one I want. There. So this is the pattern that we're looking at right here. It goes to a D, E, or F, and then it goes lower highs, much lower lows, and all of a sudden, it suddenly finds support, and it goes rallying, and it rallies to this lower trend line. I call it the falling axe because there's the handle, there's the blade. Actually, if you want to be technical, it's a declining, expanding cone, right? A V-shaped cone. And what happens is it gets to that level and it takes it out. If it takes it out, it can work its way all the way to the left side high. We haven't even gotten close. To get there, you will probably see the pink 9-period moving average almost turn positive, going above, go green above the black 14-period moving average. That's That's going to take a lot. Either some really sharp action. For instance, today the Dow's down 18, S&P is up 4. Let's just say today can happen. All of a sudden, instead of another sell-off, there's buying pressure. That buying pressure will then take the S&P to leg B if it goes above 1 penny above the high that was made 3 sessions ago. That's on Wednesday at 53.30.64. It goes to 0.65, starts leg B. If it does it today, that's going to be really important because in the S&P, we've got a slight improvement in the histogram. That's the distance between the black 14-period moving average and the red 9-period differential. But the stochastic at 27% has a long way to go to even get to 80%, let alone, let's see if it can get to 50%. It's at 27% right now. Okay, so that's why I'm saying a work in progress. But it's possible. 1, 2, 3, QQQ. Oh, I didn't finish. I'm sorry. The S&P, I was asked about the weekly chart. Gosh, we're already halfway through the show. Weekly chart did make a peak F. I have to wait for the close today. I haven't got, it can't go with a down arrow. It can go with a red plus sign at peak E. I haven't got a sell signal yet. It's still very positive. 9-period moving average over the 14. I'll be back. Dow's down 30. S&P's up 2. Basil Chapman, Tiger Technicians Hour.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi folks, we're back. I just write down questions that I had. Let's go there. Okay. So I'm going to, before I go on, GBTC is the Bitcoin Investment Trust. Now I have to ask the question, was this split in some way? Did something happen to it? Because it's not the futures. This is the actual price. And it got changed. 58.22 was the high. Now it's 51.92 back in February of 2021. I'm not sure why that happened. Maybe I can be told. Someone peaky, maybe you know. But anyway, the chart, nothing changes. The Chapman wave notations, nothing. Everything's the same. And that was a peak G right there. It was an alternate count. Peak G right there in March at the high. And that was a down arrow because it did go briefly to pink. So there we are. That's it. So this has to be a new buy signal if it's going to occur at all. So GBTC is the Bitcoin Investment Trust, trading at 47.89 right now, up 46 cents. The filling in of this gap, and this gap might have been, was this a distribution? What on earth was it? Yeah, maybe that's what it was. Now I'm going to scroll down to see if there's anything added to it. Okay, question they put, closing really nice show. No. No, I didn't get it. Okay, so what we're looking at is there was a gap. I don't know what the reason for the gap was, but it gapped down to the 39 level. That was at 39.56 on the 5th of August, and has had 4 fabulous sessions right now. And the 4 sessions at this particular point have not yet filled the gap, because the gap low that was made on the 2nd of March is at 49.73. Today's high is 48.76. It's not too far away, but it's far enough. And in the weekly chart, because it was a Monday, it gapped down. That shows a gap there as well. So my contention is that Bitcoin is going to go to a higher high. It's going to go to a leg D. Now that number has changed. Now that number is 58.51. That was the high that was made in March of this year. It's going to go to at least 52.52 because that'll make it a leg D. When it does it is the question. So I used, I don't know if it's still valid. I had said I've got a sell signal to a sell mode in the Bitcoin. And I said this weeks and weeks ago, and I said I suspect that we're going to make lower highs, much lower lows, and then we're going to see what happens if it ever gets to the 200-period moving average. That's a rising moving average, so now it's at 42.90, but it was much lower when I was talking about this. So I said I'm going to use Robinhood, because I suspect that a tremendous amount of buying in the Bitcoin, the whole big rally in Bitcoin was, I wouldn't say it just came from Robinhood, but it had the Robinhooders participating. That's just my guess. And if you look at the weekly chart, the daily chart, the 24.28 high that was made back in June with a cup formation and then a retest with a breakout to 24.88, 17th of July, with much weaker technicals, and going to a leg G and then a peak G under the 200-period moving, just above the 200-period moving average and now below. I think if you look at this chart just on the daily basis, it almost looks like that GBTC chart, right? Not the weekly chart, I'm talking about the daily chart. So my contention is that's still in play, and that there was a chance that the Bitcoin would be pulling back while gold stocks found buying pressure. They haven't done that yet. Some have. Let me just show you the gold chart. Look, it's just stuck in a range. It's now up 10, but it's been in that range in the weekly chart. It's like a rectangle formation. It's holding very nicely. I like it actually at this particular point. And therefore, if there was going to be, you'd probably need silver as well. But anyway, gold stocks, if there was participation in the low-priced gold stocks, you would then see Robinhood move higher. And that would say, let's see now what happens to the Bitcoin. Because if they rotate, that's one thing. If they go together, that's going to be added impetus for Bitcoin to go back towards at least the midpoint of the range, and that would take it to about 50, I'd say 53 to 54. Here it is at 47.52. So my answer is, the question is about the gap. I'm just going to say to you, I'd give it until Tuesday or Wednesday, but touching the bottom, let's just say it touches the 48, what did I say it was, 53 or something? 48, 73. 73 low, it's not good enough. It's got to get into that candle. If it does that on a sustained basis, I would say that's very good action. Very good action, meaning that now you can say that Bitcoin itself is going to join the gold chart pattern and go into a trading band. How does it break down? I'm just going to make it as simple as possible. 47.90, 42.90 is the 200-period exponential moving average. A close below that says, be careful, because it's still going to consolidate. The monthly chart, I wish it closed right here, the month of August, because this would have been a positive Chapman wave Roman candle, and I would have been able to say, hey, any move above that can close above the high of this month, which is at 32.28, will be really positive and say we're on our way to that leg D. But we haven't done that yet, because now I have to say, if at any week there's a close under 44.50 in the Bitcoin Investment Trust, GBTC, that's a big problem. At this point, I think it's holding pretty well. Okay, I hope I covered that. Next thing was a question. Where did I see it? It was in the Dan. No, it was in the Tiger YouTube. Just leaning over to see if I can. Yeah, I'll come back to it. There was a question then. I forgot to write it down, and now I can't recall what it is. So don't forget, Larry is actually doing one of his day trading sessions today. I always try to hop in because I love learning about these techniques and different techniques. It just adds to your experience. Remember, when you're learning a technique, you've got to make it yours. I can't be looking around saying, is this what Larry would do? I've got to make it so that I understand it, and then I do it, and then it becomes mine because it relates to my techniques. Even though I've borrowed it, stolen it, borrowed it, whatever technique it is, from someone else. It doesn't matter. It's got to become mine. So I like doing that just in terms of learning different ways of treating the market. Now let's go back to, look, the E-mini that we were looking at went to a peak D. And the Chapman wave, what I was going to say, I forgot to do it immediately. I was going to say, okay, great. Now we've got the 1 minute at a peak D, and we've got the 5 minute at peak D. But the 10 minute is only at a leg C going to a peak C. Does that mean it should still go to a D, or is it all over from now? Because you've got two of the shorter term trading platforms at a peak D and pulling back sharply. Well, at this point, I'm just going to say 53.30 is in a key support period. 53.37. I'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust. The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back, and let me just do this right now. So I wanted to show you, I had a question. So the question that I forgot was, how do you resolve the difference between the cash and the futures? So that sometimes is difficult. For instance, I can sometimes get a sell over the years. I've gotten sell signals based on the DIA. That's the diamonds. That's the trading vehicle for the Dow. But the Dow didn't quite make that D. Usually I like the cash. That's the Dow itself to make my Ds. And then those Ds are where we start to look at possibly a short side position. At the same time, what I am looking at here is they tend to get in sync together. Now, sometimes I have different, for instance, here's something. Look, the E-mini is trading, where did I go? I didn't want that, I wanted ES. The E-mini this is extended leg A, but the cash hasn't yet done that. So I always find that at some point they smooth out, but I have to treat each one separately. I have more respect for the cash, but I don't ignore the futures. For instance, here's the SPXS. Look, it's underneath the high that was made 2 days ago. Not by much, but it is. So the lettering is we've made a peak A, a gray peak A in the cash. We've made an extension to leg gray A in the futures. And then I'm not saying at this particular point that one is preferential, that one gets, if I'm starting to make tops, then I look at it and then I say, is that a D that I've got to respect, even though it's not in the cash, it's in the futures? and then I have to just give it a day or so to work itself out. But it happens rarely. But yes, it's a good question, but I'm saying that if I'm dealing with the futures, I'm dealing with the futures. The cash is almost like a different instrument altogether. They happen to be related, but I treat them separately. And then at some point, they kind of come together. That's all I can say. Next question was, could I look at ExxonMobil? ExxonMobil trading right now. See, this is what you've got to do. Now, I know someone, haven't seen her for quite a long time, but way back, she had said to me that she had Exxon shares that was given, she inherited them from her parents, and she's had them for years and years, and that what should she do? She just reinvests the dividends. I said, you could keep reinvesting the dividend. There's nothing wrong with that. That's a fantastic thing. It's like free cash because you didn't actually pay for the shares. You're just getting the dividend. But what you could also do is take the dividend, and that you could use for positions that you like Amazon or whatever it is, and that's what you start building up. So that's important. But look at this. This is ExxonMobil. You would think that under the pressure of oil not really rallying all that well, kind of pulling back, here's this falling X. It's done more than a 1-to-1 to the upside. Look at that. It's done more than a 1-to-1 left side, right side price time match. It did it perfectly to the candle that I chose. But look at this. It's gone E, F, and now here's the question. Is this an old G or a brand new A? If this is a brand new peak A, we still have to go B, C, and D. This has to go into 2020, let's see, how many months have we got? Yeah, and this would have to go into January. Otherwise, every single month would have a higher high and a lower high. And I just don't see that happening. So this is very positive in terms of saying it's walked the 9-period moving average. It held onto the green 9-period moving average was above the 14. It held onto that, even though it pulled back pretty sharply from 119 down to about 98. And now there it's back again. So yes, on a monthly chart, I like it very much in the sense that it is holding well. It's a dividend stock. The weekly chart has gone to a peak B. Now it's pulling back. The stochastic hasn't gone to 80% yet. It's 64%. It's not great, but it is improving. MACD, in fact, has been negative. Right now it's 0. So it hasn't crossed positive, but it's on its way to crossing positive. And the 9 is this beautiful indicator, has kept you in the trade, and it's still holding very well. I like it. The weekly chart, the daily chart's making higher highs basically and higher lows. So that just says 121, it's 118.23. If we can get to 120.75 next week or the week after without pulling back under 118, I think higher highs and higher lows. And this is the kind of chart that says it could very well make a peak D underneath the all-time high that was made back in the week of the 12th of April of this year at 123.75. So this is like I call it a gray A right here, gray A. I call that a gray B. And if at any point you can get the stochastic from 64 to go to 80% and it's still rising, I'll say it's in a buy signal to buy mode, and there's a good chance that it will try to target. Remember, in a rectangle formation, and this basically, if you want to look at it the way I like to look at these, basically it's in a rectangle formation, can rally if it's making higher highs and higher lows, just under, right on, or just above the previous high, and then you have to do another analysis. So I like it very much. And I would just say from everything I'm looking at here, the whole 118 to 117.5 area should be really good support. I hope that helped you. Fletch. Next question is TGB. Well, this is very interesting because, look, TGB right now is up 6 cents at 202. It's had a pretty big pullback percentage-wise from the 318. I don't think it hit 320, did it? Right there. Peak F top at 315. So 315 on the week of the 24th of May, down to this low that was made a week ago at 182, 181. Wow, percentage-wise, that is a huge percent, all right? But Now it's starting to come back, but it's stuck at the 200-period moving average. So what's your high-grade copper? High-grade copper trading just up 0.04. Yeah, it's acting okay. It's the 200-period moving average that it's been testing has been tested before, and that was a magnet for it. It couldn't get above it for a long time and hold, and then all of a sudden it shot all the way to 520, and then it's come back. Yes, it's a work in progress. It's attempting to move higher. So the TGB, I'm going to have to give you levels. What if? And I'm just going to say if at 202, next week it can even tag 210. 208 is the black 14-period moving average. If it can tag 210, that's leg B, and that'll be a good sign. But I think it's kind of stuck here for a little while. 190 is really the key support it must hold to say come on.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento Friday, July 12th and Friday, July 26th, 9 a.m. to noon Eastern Time for 3 hours of live trading. For this month only, use promo code LarryJuly24 at checkout to save $50 on your first month's subscription. For all the information and to reserve your spot today, visit the front page of TFNN.com.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So one of the things that the high volatility index, and it's pulling back so sharply, is telling me that we're in the phase right now that says rallies are succeeding, and they're in disbelief. That's why they're extending so high. And at the same time, we're in a period where buy the dips mentality is just creeping in. And that's going to be important. You can see it's done that today. Look, the S&P is now at 450. Day's young. Anything can happen. But that's what I'm looking at. Look at the way the 200-period moving average in the 10-minute E-mini chart was like a springboard, just like a trampoline. Boom. and we moved up even though you came back for the retest, which was higher. Now we're making higher highs and higher lows. We still need to make a leg D above the 5372.00 level, and that'll give you a leg D. But so far, the technicals are still improving. I like what I'm seeing. And yes, we are only long. We've got long positions. We're very lucky because we had a long position that we bought just 2 days ago at about 57.44, I think it was. And today it's 62 something, just 2 days later. I'm trying to pick things that are I would say in fashion. I don't know if that's going to be the right word, but something that's in the focus of money managers, the ones that I can see, I can just feel that they're wanting to go for these stocks. I don't know if it's going to work, but so far it's working very nicely. So yes, we have long positions, a little bit, some aggressively, and some starting points. We've actually gone to some positions we haven't had before. We wanted to get them. We waited for the big point. Remember I said we're building up a cash position because we want to get into positions we didn't get before. We want them now. So we'll see what happens if that's starting to work. We'll see if they can hold all the way through the weekend. Have a wonderful weekend. Stay tuned for Steve and all the rest of the gang. Should be a great trading session. I think love for us to close at the high. That'll be really impressive. Have a great weekend. Check out my Open Call Daily Newsletter. I'll just want to